Hey, everybody. Welcome back to the One Step Better Business podcast with Matt and Mike. If you're like most people in the world, you get all of your super, super important professional services advice from TikTok.
Yeah, that's where I get it.
Yep. Like everybody else. And one of the big things that TikTok really likes to talk about is how you should structure your business. You all need an S-Corp. Everybody needs an S-Corp. If you don't have an S-Corp, you're doing something wrong.
Or an LLC, Mike. It's either one guy says it's always an LLC, no matter what, you conduct anything in the world, or an S-Corp. But it's one or the other.
Yeah. And there is no middle ground. There is no nuance, and it applies to everybody, even though nobody understands what's going on anymore. So today we're going to shed some light on the debate between S-Corp or an LLC. That's our goal for today's conversation. But before we do that,
I have a question today.
You
Mike.
have a question.
I'm curious of this.
I have not heard this question. So normally, just so behind the scenes, before we push record, I say the question out loud. That way Matt has a couple seconds to think about it. In reverse, I have no prompt.
I don't give any heads up. All right, Mike, this is not a if then. Can you do any impressions?
Yeah, I could do any impression under the sun.
Give me an impression. What's your go-to impression?
I don't have a go-to. I just know I can do them.
All right, do one.
I'll do an impression of you. Yeah. I was going to like Beavis and Butthead. Hey, Matt, could you do any impression?
Yeah, thanks, Sam. That was dead on. You hit that one perfectly.
So that's the thing. You can't say, can you do any impression? You have to say, can you do a
Can you do a good impression?
No, none.
I can't do any voice ones, but I have a good face one.
All right. What is it?
It's my Robert De Niro.
Oh, boy.
It's good.
Are we going to see it?
Yeah. Hold on.
Congratulations. You just turned yourself into a meme.
That's good. I like it.
Yeah. Robert De Niro.
That's my Robert De Niro.
Like, what even made you think of this?
Mandy, we had talked about this morning. We were talking like, oh, that would be a good question. I don't know if Mike can do any impressions.
Can
you do any real impressions?
Man,
voice or face or?
I don't think so. Trying to think. I've never
tried to do an impression.
Tried to do impressions, maybe.
This question sucked, Mike. I'm sorry.
No, it's all good. It's all good.
Yeah. You talking to me?
You talking to me?
You talking to me?
Yeah, I don't think I can.
You seen Neighbors?
No.
Is it the first Neighbors or the second Neighbors? I think it's the first Neighbors. When there was like the frat was having a Robert De Niro night, and they all came in as different Robert De Niros. It was pretty funny. That's funny. It's pretty good. And there was it was pretty good.
I like Robert De Niro.
It was good. And one of them was like Al Pacino. It's like, ooh-ah! It's like, that's actually that's not really, it's pretty good.
But really it is.
Yeah,
I mean, they're kind of the
same thing. Yeah.
That's funny. You ever had
S-Corp or LLC, Mike?
You ever had an LLC impersonate an S-Corp?
Yes, actually many times.
All right, Matt. I don't know why or how or what has caused this, but maybe it's just my algorithm. I do feel like oftentimes on social media, I am getting hit up with debates on S-Corp's LLC structure, what you need to do if you're a business owner. And it's always they're planting their flag in the sand and saying, this is the way. There is no other way. What are your thoughts on S-Corp versus LLC?
It depends, which is a perfectly good accounting answer.
That's right.
Both serve a purpose. When I think about S-Corp versus LLC, I first think through, it's actually liability protection. Like tax is the second one, but liability protection is number one.
What does that mean?
Protecting your home, your personal assets, the liability of the company versus keeping those things segmented. And so the first rule is you should be subtype of legal entity to help protect you against the unforeseen. Now,
at what stage though? Because if I'm just now starting out, I don't have to have an LLC. I don't have to have an S-Corp.
I would say if I'm on the road, so if I have a car, vehicle is just potential. I think through if I have employees, I'm going to want to have some legal protections from both those things. Kind of, if I have a physical space, all those things, because somebody slips and falls in your rental space, you're starting to have an issue. Someone gets in a car accident and they're delivering product. somebody stole money from a client or something, or customer or something, you're going to want to have some protections against this stuff, the basic legal protections of that. Now, there's a lot of things that have to be in place to really hold that liability in place. There's a lot of rules or ideas that I would have when I'm talking about actual legal protection, insurance protection as well. I'd want to have an umbrella policy. Like, there's a lot of things when I think about liability. That's not what we're really going into today, but like, the first thing I think of is liability protection. That's number one.
But if you're like, let's say you're a solopreneur, I have a consulting business,
Mhm.
people pay me to do consulting and it's just really me. At that stage, I might even be making a few $100,000. At that stage, my entity's stuff isn't, I'm not gonna say as
For
important.
liability, you said a couple $100,000. If I'm making a couple $100,000, yes, I'm going to start taking through entity. That's a different story. But legal protection there, probably not much.
Yeah.
I'm not too worried.
And you don't have to, the thing, like, you don't have to start with an entity to get started doing the work.
Nope. You can be a sole proprietor. That's how I started my business. I was that way for the first 18 months. I was working out of my home. I was the only one working. I didn't have any employees. It was pretty straightforward. And so, yeah, I wouldn't be too concerned with the liability protection at that point. Separate checking account. I still had an EIN because I did have an employee at that point. So I had an EIN under my sole proprietorship. That being said, the second thing I am starting to think through is, what is the most tax efficient way I can get money to my pocketbook as opposed to the businesses. And so that's where I will start thinking through legal entity. And so, depending on the state you're in, there in most states, an S-Corp would be a great option. It allows you, particularly once you start making more than $100,000 or so, you're going to be able to do some segmentation between owner salary and company profit distributions. And owner salary, you'll have Social Security on that and income tax on that. But the profits from the company, from the S Corp, are going to flow to your personal tax return. You're going to still pay income tax on those profits, but you would not have to pay Social Security or Medicare tax on that. And so that is a advantage of reducing your overall tax liability if you're an S Corp.
So if that's the case, if I was an S Corp, why wouldn't I just say my salary is nothing? I want everything in distributions.
Well, IRS thought of that too. And so they have the concept, which is called reasonable compensation for the role you're in. And there are lots of articles online. There is great tools out there to help you determine what the reasonable compensation for the role you're in is. But you're going to want to come up with a reasonable compensation for your role as the owner of that business and the role you're sitting in. Now, if you're a solopreneur and it's just you, you're going to have a hard time explaining why the company profits are segmented differently than your salary as the owner. But once you have employees, you have different people, you're going to have a different role. You're not the only one producing income. You're going to have some opportunities there to start creating a gap between the company's profits and your salary.
So the IRS is saying you're required to take a salary that is considered reasonable. Again,
correct.
Reasonable. It's not just making the number up.
Correct. And there's a lot of, I'd say, even like, let's say you were in year 3, first year you lost money, second year you made $20,000, third year you made $100,000. Well, the reality of it is my reasonable compensation for that third year, I don't know I'm make $100,000 yet. So my reasonable compensation may have been $30,000.
Yeah,
that's fine. The profits at that point would be $70,000. Now I make $100,000 next year, make $100,000 next year. My reasonable compensation for what I'm doing probably needs to go up to be commensurate with my overall profit.
Yeah.
But we have had that conversation with the establishment of what is reasonable based on today. Hey, look, I don't know. I think I've been making $3 or $4 grand a month. I'll set my salary at $48,000 for the year. And then we end up having a great year. Okay, we'll do the rest in profits. You're not getting a ton of advantage at that point. Even if it was $100,000 profit, you're saving, give or take, $3 or $4 grand probably in Social Security taxes. That's $3,000 or $4,000 to your pocketbook. Well worth it. In Tennessee, New Hampshire, S Corp's not a great idea. Tennessee says S Corps are basically a C corp, which means that S corp is going to pay excise tax, which is income tax, in Tennessee at 6.5%. Which, if you do the math says, well, that just did away with all the Social Security savings I would have had, and it's almost dollar for dollar the same. Well, LLCs that are subject to self-employment tax, which means that they're going to pay Social Security tax as the owner, aren't subject to Tennessee tax. And once you get over the limits of $156,000 Social Security income, $156,000 of income, you don't have to pay any more Social Security tax. So therefore, you'd be better off being an LLC at that point.
Because essentially, you're going to save that 6.5% on everything above 150. Yeah.
156. Yeah, I think that's the limit this year. I'm not 100% sure.
It's around there.
Yeah, it's ballpark. But the logic there is the state you're in matters. The type of entity the type of business you are matters.
So on the federal level, LLC versus S-Corp.
If I had a choice, I'd rather be an S-Corp.
But on the state level, those benefits outweigh the federal level, which is really why we're talking about what should you be.
If you're in Tennessee, yeah. And this is a state planning issue in Tennessee. It's not as if I'm in Mississippi or Arkansas or most other states, it's not as much of an issue.
Is there ever a time that you would be a C Corp?
Absolutely. That's the next one. So with the release of, I don't know, I think it was maybe 10 years ago or so, they came up with, which is the qualified small business stock. And I guess it's 1202. C Corp, it makes a ton of sense if you are, if you think you'll have an exit with a substantial appreciation of the business, and you hold those shares of stock for greater than 5 years now, then you will exclude all the gain on the sale of those shares. And so that's not eligible for S Corps. It's not eligible for LLCs. Tax as a partnership, at least. And therefore, C Corp structure would be the best bet. You could be an LLC, but you still have to make the election to treat that LLC as taxed as a C Corp, and you get the same answer.
But that's specific to, because one of the things that's super important about that is that you really have a clear timeline of what you're trying to accomplish and a clear appreciation. There's some goals there.
Correct. Also, certain industries are not eligible. So physicians, attorneys, accountants cannot be, are not eligible for that QSBS treatment. So there's a lot of planning that's done around that. What we find most times though is, like we said, we started off with the idea of most people hear, hey, I saw this online and it said I should be an S Corp. I'm in Tennessee. I said an S Corp. I'm like, well, we could get around about the same answer as you would have been treated as a LLC. But typically we would have said if we were doing this from scratch, we would not have been. It limits what a couple of things we can do. S Corp, if you have multiple members, they all have to take distribution at the same percentages. S Corps have a lot more restrictions as far as, what adds to basis. So if you borrow money personally and or you have debt on the books, that debt does not give you basis. So if the S Corp is losing money, you're not able to take those losses. There's a lot of extra hoops we have to hop through in order to get the same benefits, and it's not as efficient. And you're not gaining any of the advantages of why you did it. Liability protection is the same, but taxability is not as good. And so we talk through structure a lot when we bring on a new client. It's, what is the ideal structure for you based on your circumstances, what your plans are, both now and the future. And then, how do we want to set this up for the long term?
If I've kind of gotten into my business for a few years or a handful of years, and I realize maybe somebody for the first time is really educating me, helping me understand this stuff, but I made a bad election, what kind of special considerations do I need to think about in order to undo or fix or change?
Yeah, I mean, some of the stuff we've seen is people put real estate to an S Corp. Well, that's a big no-no. Or, hey, I want to bring a partner in, but I want to how I want to treat their how I pay them a little differently. Well, that means you have two classes of stock, and that's something not allowed for S corp. So what you have to do there is talk about what does the unwinding of the entity look like. If you're an LLC, and you've elected S election, you can unelect the S election and now just be a partnership again. If you are an S corp and you want to change to be treated like a partnership, you can't. You have to do a liquidating. That's a realized event. It's a taxable event. It's not as easy as just unwinding it. Like so, there's some liquidation, which means liquidation basically means I have a taxable event. So
Yeah.
I basically treat myself as I'm selling those shares today.
Yep.
And so that's where property becomes a really big factor because you're not getting all the advantage of having that real estate inside that S corp as you wish.
Is it ever advantageous to still go ahead and pull the trigger? Let's go ahead and liquidate, kind of start over
For
in a
sure,
sense.
absolutely. We've done that many times where we've intentionally um, uh, failed the S corp tests, and so we will convert that to a C corp. That's done. We've done that a couple times related to acquisitions because there was some S corps. Uh, it There's some limitations around acquiring and also being acquired by different types of entities. Um, Also, the ability for you to we've talked about this in previous, some of your structuring around employee management and state compliance, stuff like that. So we've definitely we will break that S corp as best we can and start over. If I'm doing a true liquidation, we have to do evaluation at the time, make sure that that liquidation event is not going to cause a massive tax effect without having cash available, because I'm assuming you didn't actually generate any cash selling it to yourself. So
Yeah. It sounds like this is a really important election or decision to get right on the front end.
it is. Uh, it's not. It's not like a death nail though if you get it wrong, but it is something that you're going to end up creating some inefficiencies and some extra headaches if it's wrong. And depending on who you're working with, them handling that way in the most tax efficient way possible to either get you back to the right answer or unwind it create some extra costs on your end. I wouldn't say like I would probably say I could probably get most businesses to the same exact, pretty close to the same effective rates over time, no matter what structure they're in. But I'm gonna have to hop through the extra hoops, and so I don't love that answer from an efficiency standpoint. And like I said, we always want to keep things simple. So talk about reasonable compensation, and then you have to talk about, well, am I going to do a bonus this year? Am I going to do a distribution? If I do a distribution, what does that cost me in tax in Tennessee or wherever state you're in? And so just understanding the complexities that creates if you're not in the right entity from the beginning. Um, I want structure. Structure should allow your business to be where it is today and where you're wanting to be. So it's not just a one-time thing.
Yeah. Tax planning, liability protection, big main drivers, and what that selection is
And
going to look
exit
like.
planning. And exit planning.
Sure, sure. Yeah. Cool. Any last thoughts?
Nope. I think I'm good.
So it sounds like at the end of the day, TikTok could be right, could be wrong. It depends on the situation,
Yep.
which is, of course, the best answer that you could possibly have. It's not as cut and dry as always do this or always do that. Your goals, your plans, your desires, all of that stuff is going to start to matter. So make sure that you're talking with somebody who kind of can guide you through that stuff, educate you, and you'll be better off for it. Thanks, everybody. Have a great day.